All right, let's talk about choosing the right investment platform for 2026. I mean, if you've ever felt totally lost, kind of like wandering around a giant car dealership, you are definitely not alone. But don't worry. Today, we're going to hand you the keys and help you find that perfect ride for your own financial journey. So, let's start with a really simple question. Think about it. When it comes to your money, what are you looking for? A reliable daily driver? A souped-up sports car? Or hey, maybe something that drives itself? Your answer to that question, it's going to tell us a ton about what you actually need from a financial platform. And that's because, honestly, picking a broker is so much like buying a car. I mean, you wouldn't buy a tiny two-seater sports car if you have a family of 5, would you? Of course not. And the exact same logic applies here. The best platform, it's not about who has the flashiest commercials. It's about finding the model that is built from the ground up for you. Okay, so the very first step, we've got to figure out what kind of driver, or, investor you are. And this is without a doubt the most important decision you'll make. Seriously, everything else flows from this one thing. So you'll find that most of us, we fall into one of 3 main categories. First up, you've got the everyday investor. This is our reliable daily driver, right? You're focused on the long haul, building for retirement. Then you've got the active trader. This is our sports car enthusiast. You want power, you want precision, you want those pro-level tools. And finally, there's the passive investor. You're the one who wants a super dependable ride you can just set and forget and let your portfolio grow on its own. So, take a second. Which one sounds most like you? So, if you identified as that everyday investor, a great example, according to stockbrokers.com, is something like Fidelity. Just think of it like the perfect sedan. It's reliable, it's packed with great features, amazing research, a really slick mobile app. It just does everything you need it to do, and it does it really, really well. All right, now let's talk to our active traders out there, the folks who want that sports car performance. Well, for you, a go-to choice for the pros is often interactive brokers. And why is that? It's all about raw power. We're talking institutional-grade platforms, top-notch trade execution, and, this is critical, really low margin rates for those more complex strategies. This is the high-performance machine, no question. And what about our passive investor, the person who just wants to set it and forget it? Well, a platform like E-Trade is pretty much built for you. What's interesting is that, as the source points out, it has 2 different platforms. So it can be that simple automated car for your retirement savings, but it still has the horsepower under the hood if you ever decide you want to take the wheel a bit more. Okay, so you've kind of picked your model, but just like when you're buying a car, the sticker price is not the whole story. See, this whole era of commission-free trading, it has a little secret. And that secret is it's not actually free. So now we've got to pop the hood and look at the true costs. Yeah, you got to be careful here. Research shows there are a bunch of these so-called hidden fees to watch out for. Things like account maintenance fees or fees just to withdraw your own money. Can you believe that? Even inactivity fees, where they charge you for not trading enough. All these little things can seriously add up and eat into your returns. But the biggest one for a lot of people, it's all about margin. Okay, pay attention, because this is where things get really critical. Look at this data. It shows a massive, massive difference in what brokers charge you to borrow money. Remember, margin is just a loan from your broker, and the interest rate is what it costs you. And I mean, just look at that gap. You've got traditional brokers like E-Trade charging over 12%, and then a platform like public.com at under 5%. That is a huge difference in your costs. And this chart, it shows you what that means in the real world with real money. Let's say you have a $10,000 margin loan. With that higher rate from a traditional broker, you could be paying almost $1,300 a year, just in interest. But with a lower rate, it's just over $500. So think about that. Choosing the right platform could save you more than $750 a year on interest alone. That's insane. All right, so we've talked about investor types, we've talked about costs. Now, let's talk about the engine. What are the features under the hood that are actually going to power your growth over the long run? One of the most powerful features out there is also one of the simplest. It's called a dividend reinvestment plan, or DRIP for short. The best way to think about it is like your car's engine is still working for you even when you're not driving. So when a company pays you a dividend, a DRIP just automatically takes that cash and buys more shares of that exact same company. Simple, right? So why is that such a big deal? Well, it's the key to unlocking what's often called the magic of compounding. A drip puts your money back to work instantly, so there's no idle cash just sitting there. And it lets you consistently add to your investments without you having to lift a finger. You do that for decades, and this one automated process can have a dramatic, massive impact on your total returns. It's a simple feature with a huge payoff. But what if you want to take automation to a whole nother level? I mean, what if you want the financial version of a fully self-driving car? Well, that's exactly where robo-advisors come into the picture. And a robo-advisor, it's pretty much what it sounds like. It's an automated service that uses computer algorithms to do all the heavy lifting for you. It builds a diversified portfolio for you and then manages it over time. And it does it all based on your specific goals and how much risk you're okay with. And getting started is incredibly simple. Seriously. You just answer a few questions. It's like a quick quiz or a setup wizard. And based on your answers, the algorithm goes to work and builds you a custom portfolio. From that point on, it just takes over. It automatically rebalances things, optimizes your investments. You don't have to do a thing. It really is the ultimate set it and forget it option. Okay, so we have looked at all the different models of cars, we've checked under the hood for the true cost, and we've even explored the self-driving options. So now let's put it all together. Here is your clear roadmap to actually get you on the road and started. Here we go, your 4-step checklist, straight from the experts. Step 1, just learn the basics. You know, what are stocks, ETFs, that kind of thing. Step 2, open the right kind of account for your goals. An IRA for retirement is totally different than a standard brokerage account. Step 3, and this is a big one, start small. With fractional shares, you can buy a piece of an expensive stock for just a few bucks. And step 4, use the tools the platform gives you. Most have tutorials and paper trading accounts so you can practice driving without risking any real money. And that really brings us to the final, most important question. As you make your choice, you have to ask yourself this. Is the platform you're looking at just a tool? You know, something to place trades? Or is it a true partner in your financial journey? Is it designed to line up with your goals, keep your costs low, and actually help power your growth for years and years to come? Getting that answer right, well, it can make all the difference in the world.